Yeah. And there's a saying I get from a lot of our engineer clients is there are lies, damn lies, and statistics. And, even some of the brightest minds out there get it wrong because they raised interest rates 11 times. Historically, that puts us into a severe economic, I'll use the word recession, and it did not.
And welcome into the program. This is your game plan for retirement with Northwestern Ohio's resource for a common sense approach to planning for your financial investment and retirement future, guiding us with our money and our investments. He is Chris McIntire, president and founder of McIntire Retirement Services. And Chris, as we start a fresh year and look to the year ahead, we always desire to strive to achieve the most and make the most of financial opportunities, which we need to look at what has been updated, what has changed for the year ahead. We want to take those predictions of what this year ahead might hold and talk about the merits and the value of predictions, and then talk about how to formulate solid financial goals. So that's what we'll be talking about today on your game plan for retirement. So happy to have you along.
Yay, my pleasure. Happy New Year, everybody.
Yeah, absolutely. So, more than just hopeful resolutions, though, Chris, we've got to have a plan to make progress. And I know that that's what you stress and emphasize and help clients put together there at McIntire Retirement Services. You help them structure the plan. Are you looking at and reviewing and putting together a lot of plans to get the years ahead going?
Yes, absolutely. And you always look at where are the investment opportunities. So, you're always looking at opportunities. Do you tweak some portfolios here and there? We obviously have a new administration coming in, and I would think probably more of a pro-business versus the previous administration to be politically neutral here. We won't name names.
Yeah, but Chris, I mean, we talk about opportunity, and I've heard opportunity is where luck meets preparation, or that luck favors the well prepared, right? In creating the opportunity. Opportunity is the product of preparation. So we really need to be prepared to identify and then seize on opportunities when they present themselves.
Yeah, and I mean, I'm right up here. We have a Marblehead Coast Guard station. So, and I took Latin in class. So their motto is Semper Paratus, always be prepared or always prepared. So, looking for those opportunities now. The energy markets to fuel artificial intelligence would certainly be one, and AI seems to be continuing that drive there. But that's one of the areas that we look at. The energy market's probably going to expand wider versus windmills and solar farms. Now it's probably going to spread out across nuclear, coal, natural gas. I would think under the new administration here. Yep.
Yep. Well, always a great time to formulate a game plan for positive action to identify those opportunities. If you'd like to take a look at your plan, that is the value of the program, ladies and gentlemen. Information, education, but also the opportunity to sit down with a qualified, experienced professional advisor and planner, Chris McIntire. If you would like to get your game plan for retirement put together, pick up the phone and give McIntire Retirement Services a call. 800-868-1194. That's 800-868 1194. 800-868-1194. So, Chris, let's get into some of these updates, things that have changed for 2025, for the current year and the year ahead here. Those who are receiving Social Security will receive a little bump in their check, a nice little increase, COLA.
Sure. Yeah. Cost of living adjustment there. They use the third quarter of the previous year to make that determination. So or June, July, and August, or I'm sorry, July, August, September to determine what is the cost of living adjustment. So 2.5% going forward. And it averages out, over the last 15 years or so to usually being about 2.3%. We've had years, obviously, where it's much higher than that.
Yep.
And was it 2022, I believe, was our
Like
big.
9.8% or something like that. Yeah, this year has been the lowest of, I think, the last 3 or 4, right, Chris? But still higher than average is what you're saying.
Yeah, it sure has. And that obviously the higher the cost of living adjustments, the more strain it puts on the Social Security system. And we recently had some new legislation passed, the Social Security Fairness Act, that got rid of the windfall elimination provision and the government pension offset. And I mean, this just happened a few days ago, as you and I are talking here today, that it was signed into law. So this did happen, had bipartisan support. So affects people, especially in Ohio. We have a lot of people that work for the government, teachers and firefighters and police that, may have worked part-time under Social Security and then they got their state job, if you will. So they get a pension from the state of Ohio. One of the other, we have Ohio public employees, we have school teachers, school employees, and then state teachers retirement. And then you got your police and fire, where they're not contributing to Social Security, but they get a pension from the state. And the windfall elimination provision then discounted their work under Social Security if they didn't have 30 years of substantial earnings in there. So that has gone away. So we're going to see some people get some increased payments here pretty significantly, teachers and so on. So we got some happy clients.
Yeah, I heard this, Chris, and I immediately thought of you because you have talked about this often. I guess some states have this, some states don't, or some professions, government workers, like you're saying, have this. But across the board, there are going to be a lot more retirees in the state of Ohio that get to now receive a Social Security or an increased Social Security. So it's like an extra pension
Sure.
income annuity for those folks supporting their retirement.
Yeah. So, and again, some people get $3,000 a month on Social Security. If you only work part-time and you were getting 1,000, but you get money from your state pension, you might only get $500, for example. So now you're going to get that full benefit you were entitled to. So that's a good way to describe it. So hey, that helps those folks get some more dollars in their pocket. I don't know if it's going to be a significant bump in the economy, but it does add more strain to the Social Security system because they're
Right.
paying out more, right?
Right. Yeah.
So, and I've got on my sheet here that, the cap on wage earners contributing into Social Security for 2024 was about 170,000. Now it's $176,100. And so, but only 6% of the workers hit that cap. So
Yeah.
I think, we may end up eventually see them raise that significantly. And you and I have talked, that's one I could live with, take that to 200, 250,000. That would solve a lot of Social Security's problems, just that right there. But we
Sure.
may see delayed retirement and things like that coming up as well. A lot of changes could be forthcoming, Peter.
Well, I know the windfall elimination, the Social Security fairness, Chris, does that change projections for some people's retirement? Like what they thought retirement was going to look like versus what it now could potentially look like with adding that Social Security back in?
Yeah, I suppose it does because I just had a gentleman. He was a retired firefighter. They were just in the office here, and he's probably going to get another $450 a month. Which hey, that might not sound like a whole lot to you. Call that $5,000 a year times that by 10 years. It's
Yep. Yep.
$50,000 that wasn't there. So
Nobody's
hey,
going to turn it down, right, Chris?
sure. Yeah, they may go out to eat a little bit more. They'll probably spend, it become discretionary dollars that works its way into the economy. I would certainly think so.
Yeah. Now, you mentioned that only 6% of workers hit that cap for higher earners. But, Chris, there's an awful lot of income within that 6%. So maybe only 6% of people, but those 6% earn such a high level of income that there's an awful lot of income over there, which is why you suggested that may become a target into the future.
I would think so. It'd probably be something that would get, kind of, if you want to call it bipartisan support, because it's not really, it's a tax increase on those that could probably afford it for the general good of the population. It's not like it's, a targeted income tax increase. This is Social Security, a pretty big bedrock of the community. And let's be honest, $176,000 is a good amount of income, obviously. But like you said, boy, there's people that make $8-10 million a year. I mean,
Yeah.
LeBron James could probably afford to pay a little bit more into the Social Security system. And,
Yeah.
you know,
Juan Soto. We'll talk about
yeah,
Juan Soto here with
there you
his
go.
deal and
Yeah.
how much he'll be paying in taxes. But yeah,
Yeah.
so somebody making $176,100, Chris, pays into Social Security, and their employer does as well on 100% of their income, where somebody who's earning 17.6 million would only pay in on 1%. So that's where this probably gets that bipartisan support that eventually, it's not on any table of legislation right now, as far as I know, but that's one of the areas that we've repeatedly talked about because Social Security has this looming problem. And now with the Social Security Fairness Act, we're giving even more people more Social Security. We're going to have to face this at some point in time. And by the way, like I'm going backwards in our conversation here, Chris, but that COLA, the cost of living adjustment, that's actually not just for people receiving Social Security. That's for everyone's projections across the board, whether they're 75 and collecting or 45 and still working their way there. Everybody gets that cost of living adjustment in their equation.
That's correct. Yeah, because they do averaged index monthly earnings, index for inflation over your entire working year. You're absolutely right. So they're treating money that you made in 1990 in 2024 inflation adjusted dollars.
Yep. And that's going to bring the potential max monthly full retirement age benefit up. If you have enough credits for Social Security, not a lot of people max out their Social Security, but it's nice when we do and when we see that go up.
Yeah, absolutely. And it's what is it, 12.4%, I think it is, because Medicare's on top of that. I always get them confused. So 12.4% of your income up until that 176,000 goes into Social Security. So the worker pays half, the employer pays the other half. Peter and I are self-employed. We pay both halves of it.
Yeah, that's the self-employed penalty there, so to speak. Chris, we've talked about the fact that some people with Social Security are both claiming and collecting and working simultaneously. Some because they want to and they want to fill the time. Some because maybe it's a financial necessity. Regardless, if we did that before full retirement age, there was a penalty. There still is a penalty, but we can earn a little bit more in 2025.
Yeah, yes, we can. And, it's a big topic that comes up. A lot of times it's for people that worked until the month of June to get to good weather here in Ohio and then retired. And they always ask, can I take my Social Security? Said, well, I mean, it doesn't include the money you made before you retired. It's the money you earned after you retired when it comes to, filing early, like at 62 and then working part-time. So, it's always an educational process as we walk the people through that because they said, well, heck, I made $50,000 up until June and then I retired. I can't take my Social Security until next year. I'm like, no, you're not working anymore. You can start taking Social Security in July or August because you don't have that earned income coming in. You have to be cognizant of how much money you earn while you're claiming Social Security then.
Yeah, and the limit for 2025, $23,400 or 1950 a month if you are doing both simultaneously. But these are factors, Chris, that you help to include and incorporate and integrate into the plan. Again, we're talking about opportunities. We are talking about things that have changed for 2025 and updates. That's how we can identify where and when opportunities are. But things like the higher amount of Social Security, the Social Security Fairness Act, the early filings plus earning money and when and how to claim and collect, timing of benefits. These are things that you sit down specifically with an individual or couple and show them how they apply to their unique individual situation.
Yes, we certainly do, Peter. And, taking into consideration all of the opportunities like we talked about before, and then we'll say even some of the traps you have to watch, like working and collecting Social Security before your full retirement age. We look at a lot of long-term care, different types of policies and things that we can put into place in addition to investments and tax planning as well.
Opportunities, issues, and risks, ladies and gentlemen. You want to identify all of them in your planning. Chris McIntire's got the trained eye, experienced, qualified professional to help you with that. Pick up the phone and give a call if you'd like to put together your game plan for retirement. 800-868-1194, 800-868-1194. Now, Chris, on the other hand, where they give us the COLA, the cost of living adjustment on one hand, they take it away on the other hand. Medicare premiums are also increasing for 2025.
Yeah, they looks like in premiums increase by 5.9% on that Part B, which is the piece that comes out of your Social Security benefit. It's $185 in 2025, and last year it was like $175. We'll just round it up a little bit there. So, about $10 a month difference there. And then, there are other deductibles that come into play with Medicare as well. So for some folks that had Cadillac health plans while they were working, they may be paying more in retirement for healthcare expenditures. Where like Peter and I being self-employed, we pay a pretty stiff premium, and we would be paying less if we were on Medicare typically.
Yeah, but those costs need to be included, incorporated, thought through as far as what we're going to net from the Social Security. And of course, Chris, each year, kind of looking at the coverage that we have, especially when we turn 65, the requirements for enrollment during that initial enrollment, and then every year the open enrollment period. And then, Chris, what we know is that not all Medicare premium costs are the same. Depending on our income, we could encounter IRMA, which is a big factor for some retirees.
Yeah, and this comes into play where people make big lump sum payments out of IRAs to buy a house, pay off a mortgage, if you will. So IRMA stands for Income Related Monthly Adjustment Amount. So, we live in a world of acronyms. So for a married couple with modified adjusted gross income, which is the most friendly, it's got all your deductions and all of that in there. For married filing jointly, $212,000, you're paying the basic Part B premium of $185 a month. If you go above that, your Medicare premium deduction is going to be $259. And that's from 212,000 to 266. And it works its way up, the higher up you go. We won't bombard people with numbers that are listening, as it's hard to hear all those numbers. But just remember, an extra $100,000 out of your IRA account to pay the mortgage off might cost you more on Medicare for a couple of years as well, too.
Or those Roth conversions, which I know
Yep.
that's one of our opportunities we'll talk about. You got to be careful with that. By the way, that's each, right, Chris? Because you mentioned that this was for joint tax returns. So if it's a joint tax return, that premium monthly, we're going to times two because we've got two spouses in that married equation. Each one of them is going to have that premium amount. And my question here, Chris, kind of commingling topics here. With that Social Security Fairness Act and people getting a bump up in their Social Security, could that have an unintended consequence of actually causing some people, if they were right on the threshold, to start to encounter IRMA when before they may not have?
That's a good point. It certainly could, depending on how big those bumps are, and you get a couple of good teachers and firefighters with good solid pensions, and it could be a year you brought in extra money from an inheritance. You got inherited IRAs, things that are just driving income up, and all of a sudden, the law of unintended consequences hits you. And think about that: $185 a month, and you got a married couple, that's $370. That's just out of your Social Security benefit. Then you got to buy the supplemental plan for, say, another $150 a month. So there's another 300. You got the Part B prescription drug benefit, could be another $100 a month times two. So, you could be looking at $1,000 a month for Medicare or medical expenses in retirement for some of you. And, many people don't realize that. And that's that thing, kind of back up just a minute here, Peter. We were talking about taking Social Security early, right? Well, remember at age 65, then that Medicare premium deduction is going to kick out of there for most of you that, draw Medicare at 65. And now your benefit's going to go down a little bit. So make sure you understand that, because $185 a month. If you're getting 1850, that's a 10% reduction in your income, and more. It'll be more than that as time goes on.
And that's before anything happens. That's the routine cost without the copays and deductibles, which I know have caps and limits, but still got to factor in that sometimes things happen with our health. That's why we have the insurance coverage, but there's going to be expenses there as well. And by the way, that's the base Part B plan. If you got prescription drugs, Chris, you mentioned that. That also has the tiers of income that is essentially income related means tested, where you've got higher increased Part D premiums for your prescription drugs as well. Let's talk, Chris, if you would, about another side on the benefits column for updates for the year ahead. We can actually save a little bit more with our contributions to our employer sponsored plans.
Yeah, yep, absolutely. You can update, and I got to look at my cheat sheet here, Peter, because everything changes, and it'll take me 6 months to remember this.
Yeah.
Um,
It's not much, $500 more, right?
Yeah, yep, yeah, it is. So, you got 23,500 for the workers. If you're over the age of 50, you got $7,500. So, extra catch up, they call that. The IRA catch up is 7,000 plus another $1,000. So, boy, you can really put, you're getting up there close to, that $50,000 threshold there that you can defer income for those of you that, make that kind of money, and you can for some of those savings. That's a great thing to happen.
And then, due to the Secure Act 2.0, Chris, there was a special donut hole between
Yep.
60 and 63 where they've got even more ability to do that catch up. Instead of 7,500, they've got what, 11,250?
Yes. Yep. So from 60 to 63 there. So just really targeting those getting ready to retire, probably helping them do some extra savings. So, you got 23,500, add 7,500 bucks to that, so 31,000, and then potentially another 11,250 between 60 and 63 years old. So some great opportunities to drive that income down. Now you'll pay tax on that money eventually when you take it out. So there's two sides to the argument here. Do you pay the taxes now so you don't have to pay them later? But if you're an upper income earner and you can afford to put an extra 11,000 in after maxing out a 401k, they're probably in a pretty high income tax bracket. So making those contributions would make a lot of sense to me. And
All
then you could look
likelihood,
at
yeah.
Roth conversions down the road and things like that, Peter.
Chris, it strikes me as a bit unfair, and yeah, you mentioned that we are responsible on our own as business owners oftentimes, but the limits for employer sponsored plans, if I've got a 401k or a 403b, that seems to get more increases than we have on our own as IRA savers or Roth IRA savers.
Yeah, it certainly does because you're talking 30, $40,000 for the 401k side and 8,000 for the IRA side. And you and I are self-employed, so we could have a SEP IRA, which self-employed, which gives us the ability to put more money into it, of course. But the traditional IRA is only 8,000 for over the age of 50. So for those that haven't taken the steps to adopt other types of plans, they might want to look into that in 2025.
Yeah, and you read my mind because there are other options besides and above and beyond for different types of description of workers or small business owners or employers. There are different types of plans. So this is a very generic conversation
Yeah.
about your retirement limits and limitations. But you might want to look at simples or SEPs or other variations of those retirement plans if you've got a certain situation and the ability to save more.
Yeah, yep, that's a good point. And but so like a traditional IRA is your own, and if I had a SEP IRA, which we do, and I make a contribution to my SEP IRA and 10% of my income, I have to put 10% of every employee's income in it as well. So I mean, some of these things have some pretty strict limitations for the small business owner, without a doubt.
Yep. Well, wrapping up here, Chris, every year they have all of the predictions, right? The talking heads, the smart big brains of the financial world. Banking giant J.P. Morgan expects the U.S. economy to remain strong in 2025, as you talked about at the beginning of the program, driven by AI investment and better economic policy. JP Morgan predicted that the S&P will reach 6,500 by the end of 2025, representing an estimated 9% upside from current levels. However, I do want folks to remember that the last 2 years, JP Morgan also predicted that there would be a recession. 2022, November, they predicted a mild recession in 2023. 2023 ended up being a fantastic year. And then in 2023, the end of 2023, looking at 2024, economic growth is likely to decelerate in 2024. So predictions have been wrong as long as they have been made, I feel like, Chris.
Yeah, yeah. And there's a saying I get from a lot of our engineer clients is there are lies, damn lies, and statistics. And, even some of the brightest minds out there get it wrong because they raised interest rates 11 times. Historically, that puts us into a severe economic, I'll use the word recession, and it did not.
Yep.
And now we're cutting interest rates and bond yields are surging. So the exact opposite is going on, right? Mortgages, they're cutting interest rates, but mortgages are getting more expensive because government bond yields are skyrocketing while CD rates are falling, So, that's a risk to the stock market because if a 10-year government bonds yield is 4.6%, why do you want to risk it in the stock market? So that's one of the arguments. Okay, are we going to get into a tug of war here with bond yields continuing to increase, and that'll affect equity prices? So just to wrap that up there, buddy.
Yeah, it's what's up is down, what's left is right. Everything's Wonka world in the financial markets, it seems like, Chris. Good Jerome Powell, the head of the Fed, even said people need to start treating bad news like bad news and good news like good news because it's been backwards for quite some time. Bottom line, though, Chris, if you want to make the most of the opportunities of the year ahead, you form good financial habits, you identify those opportunities, and you plan and prepare ahead of time. And that's what the game plan for retirement that you put together for and with your clients tries and strives to help achieve.
Yes, yep, absolutely, Peter. And it's a very rewarding career that you and I have here when we get to sit and help people and show them that, look, you're going to be okay through retirement. And obviously we have to tell people, look, I think you need to hang in there another year or two and put some icing on the cake here. So, but that's what our job is to do. Tell them what they need to hear, not what they want to hear. That's what they deserve.
Yep. Well, stay informed, set goals, take predictions far less seriously than having a real, actual plan to determine your future, ladies and gentlemen. Get that game plan for retirement put together. At McIntire Retirement Services, they strive for informed clients to make sure that you've got the plan in your hands, that specifically if you'd like to learn how to retire, pay less in taxes, have more financial confidence, keep more of your money, give Chris McIntire and McIntire Retirement Services a call, 800-868-1194. That's 800-868-1194. 800-868-1194 for your game plan for retirement. Chris, always a pleasure having you here on the program.
Hey, my pleasure. Yep, be safe out there, everybody. Stay warm. Thank you.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.